That's now the rally in oil prices also took a pause at the start of June. And our next guest said then it was a chance to go long. West Texas crude has gained about 4% since his recommendation. And we have Jonathan Kornfeld, an options trader and director at Hudson Capital Energy. He's back with us in Singapore today. That's a very striking tie you have on today, Jonathan. Maybe it fits your mood. But, John, let's talk about oil prices. As we've been saying, the strong dollar having a big influence on the price of oil. But when are the fundamentals of supply and demand divergence really going to start affecting the oil prices once again and see it head higher?
Sure, that's the big question. I mean, we were certainly due for a correction. And if you look back to around mid-April when crude began this rally, around $49, it has just been one direction higher. We had a couple little pullbacks, maybe $3, $4 at a time, where the market consolidated in the 60s. But since then, around $49, it has just been straight up. And this correction we saw yesterday was certainly a long time in coming. There's a lot of support around 68.5. But again, as you said, the fundamentals, the supply and demand picture has really been pushed into the background right now because most of the move higher, there was an enormous supply overhang. If anything, in the last couple of weeks, we've seen some of that supply actually be pulled in by the refiners to produce some gasoline because of the refining margin. There's still an enormous amount of supply, but if anything, the fundamentals they're not bullish, but they're just less bearish at this point.
Well, let me show you something, Jonathan. Look on your screen there because over the past year, we have seen oil and the dollar diverge, as you see there with those two lines going in opposite directions. Do you see this trend maybe continuing, and will there be more pullbacks in oil as the dollar continues to strengthen, which is what is expected?
Well, that's the big question. You know, what is the time period for the dollar to continue to strengthen? I think in the long term, actually, in the next year or two, the dollar will actually weaken over in a broader sense, and I think that will push crude oil higher. If you're looking at a trade in the next week or two, then really anything can happen, and that goes along the same lines as with natural gas. You're seeing some selling in crude oil, some buying in natural gas, and again, that has nothing to do with fundamentals of the actual commodity. It has more to do with the assetification of the commodity itself. It's just become more of an asset class. And again, the fundamentals really it's very difficult to even bring them into a conversation because they've been ignored for the most part.
Well, let's talk about trades, Jonathan, because as an options trader, would you actually recommend right now that your clients buy, say, these $65 put orders, which last week were one of the most sought after options contracts? Is that a smart move?
Right. Well, something happens in the option market when everyone scrambles to buy something. What you have is called skew, and the relative value of that option, of the $65 put, becomes extremely inflated relative to maybe the $75 call. So at that point, it's what are you even paying for at that point? Because if the market does drift lower, there's something called implied volatility, which is a large part of the option price increasing. That's going to get hit. And it might not actually be the best time to buy that. Actually, if you're looking for some downside protection, you might want to buy put spreads, like maybe the 45-60 put spread or the 50-60 put spread, something that offsets a little bit of that downside skew and offsets a bit of the cost. At the same time, if you're looking to do some upside, you might want to buy call spreads. I think trading just swaps or trading futures at this point is a very volatile strategy, and it's very dangerous because we can really move in any one direction right now just because of the lack of focus on fundamentals, and it really depends on investor whims at this point.
Well, Jonathan, if we're expecting oil prices to drift down lower this week, is this again another opportunity for investors to buy in?
Yes, I do think it is an opportunity in the long term. Maybe something along the lines of December 2009, $90, $100 call spread, something like that. It's very dangerous to get into the market right now and just buy swaps if the market starts to dip because, again, as I said, a big trade that everyone's talking about right now is selling out the dollar long or selling out the crude longs and buying natural gas because the crude oil natural gas spread is at historically wide levels right now. That has nothing to do with fundamentals, but it's more traders are just looking at that, trying to arb the difference.
Okay, and Jonathan, you do expect oil prices to gain about $10 in the next 3 to 6 months. And what's going to push oil prices higher?
Purely speculative interest. I think there's a lot of bearish fundamentals around natural gas, which I've already mentioned. There's some movement away from crude and into natural gas. But I think the bearish fundamentals for natural gas are a lot stronger than crude. The only thing we have in natural gas is the hurricane season right now. In the United States, natural gas inventories are at such a level that they're going to have to just start throwing away the natural gas. They just burn it off. They just get rid of it because there's just too much of it. Now, when you hear that happening to a commodity, there's no reason for a price of it to rally. In the long term, crude oil should be higher. So if you have to choose between one or the other, I think it's going to be crude oil. I think the demand is still there from China. The demand may be coming back in the U.S. It's still hard to tell, but I think purely from an investment point of view, as a hedge against a weaker dollar, a hedge against inflation, crude oil is probably the way to go.
Okay, Jonathan, let's take a viewer email at this point. We have one from Rishi here in Hong Kong, and he asks, is this a data-driven market or a sentimentally driven market this year for commodities such as oil? Treasuries and real estate, I don't think you're an expert in, so we'll just take the commodities and oil question. What do you think, Jonathan?
I think it's really sentimentality. That there's an enormous amount of fiscal stimulus out there. There's an enormous amount of cash out there that needs to go somewhere. Everybody's worried about the inflationary impact of this. People are worried about the Fed buying treasuries, what's going to happen to the U.S. dollar. It's really just, it's sentiment. It's what is going to happen in the long run. We need to put our money into something that will be needed in the future, and crude oil will be needed for the next 20, 30, 50 years.
Okay, Jonathan, quickly, before we get to commercial here, you're predicting a $10 move for oil in the next 3 to 6 months, but Goldman Sachs is thinking of a peak of $85 this year because they're assuming OPEC is going to move. What do you think of these predictions?
Yeah, I really think that there's a lot more room on the upside than on the downside. I think the move has mainly been from funds. It's been from ETFs. It's been from investors. But that is really what has become of crude oil right now. You can't say that the fundamentals should have us a lot lower because that's the supply and demand fundamentals. On the other side, you also have investors using it as an asset class, and that is going to continue to push the market higher. There's only a certain amount of places that you can really put a lot of this cash right now, and commodities are one of them. And that is going to continue to put a lot of upward pressure on the market. It's difficult to say on a week-by-week basis, but 3 to 6 months by the end of the year, yes, there is more upside room.
Okay, Jonathan, stay where you are. We're going to talk to you after this break. Let's bring back in Jonathan Kornefeld, an options trader and director at Hudson Capital Energy, and he joins us from Singapore this morning. And another viewer email for you, Jonathan. We have Larry asking, do you have a projected long entry point for crude?
Well, you know what? I think that depends on how long you're looking at the market. Over the very short term, I think we are due for a sharp move lower. I think we're due for a correction, just to retrench before we do move higher. I think by the end of the year, we're going to be higher than we are right now. And I think by the end of 2010, we'll be higher than we were at the beginning of 2010. I think the overall upward trend in crude oil is still intact. We're not going to see an enormous jump up to 150 like we did before. That ground has already been tread. And what we're going to see now is the market just slowly go back up, as maybe the supply-demand picture becomes a little bit more pertinent towards the end of the year and 2010. I think what a lot of the funds and investors are hoping for is that they bought it up, the market continues to rally, everyone's jumping into the party right now, and if they can keep the market up long enough, then you will start to see supply drain and demand start to build, and then there actually will be fundamental reasons for the market to be where it is, and then you'll have a real push for the market to actually continue higher on a normal fundamental basis.
Okay, Jonathan, let me just ask you this. Over the weekend, we had these disputed election results in Iran. Really didn't hit the oil price that much. I mean, why aren't traders investing and reacting to these geopolitical risks with Ahmadinejad back at the helm?
Right. Well, Ahmadinejad, he's been in power for 4 years, and it looks like he'll probably be in power for another 4 years. I think there's no real surprise over what happened, and it really isn't going to affect the price of crude oil unless there is actual real civil strife. We've already seen some protests in the street. We've seen some violence in the streets. And, of course, in one of the largest crude oil producers in the world, that's cause for concern. But the concern is not big enough yet. They're investigating the election results. Any real rally in crude oil as a result of something happening in Iran would probably be the result of tensions rising between Israel and Iran, not because of an election and some disputed results, which are being looked into by the government.
Okay, well, Jonathan, let's get into some more viewer email here. We have Nicholas writing in asking, what is your overall analysis of the petroleum sector? Pretty broad-based question, but can you answer it?
Sure. I think, well, if you want petroleum, let's talk about gasoline. I think unleaded gasoline has hit its peak. The main demand time is around Memorial Day in the United States. We've already passed that. I think there's been some refinery issues in the Gulf Coast right now. So also going into hurricane season, that makes it a little iffy as to what's going to happen. There was a short-term target of around $20, between $17 and $20 in the gasoline crack, the refining margin between crude oil and gasoline. Failed to hit that, the $20, especially. We dropped back off to around $12, and we've rallied since then in the last couple of days. So I think we're back above 15 right now. So,
Jonathan, we're going to hit break here. So
yes.
why don't you hold your thoughts? We'll be back with you after this break. We're going to go to commercial first, pay some bills. And welcome back to the Bloomberg Edge. We're just going to finish up our discussion on energy with Jonathan Kornfeld, an options trader and also a director at Hudson Capital Energy in Singapore. And Jonathan, we talked about crude oil, we talked about gasoline. Let's talk about natural gas right now because, as you mentioned, there is buying in natural gas these days, but you still seem pretty unconvinced about the prospects of it in terms of risk versus returns. Why are you so hesitant?
Right. Well, in a classical sense, in a fundamental sense of looking at the commodity itself, I'm definitely bearish. There's a lot of bearish issues surrounding it right now. There's, as I said, there's an enormous supply overhang in the United States of natural gas, just like there was with crude oil. Nobody seemed to care that there was all this extra crude oil sitting there. Price got driven up. So when you move a commodity towards an asset class, it makes it a lot more unpredictable in terms of what is going to happen in the short term. The crude oil natural gas spread is at a historically wide spread right now. So people are starting to get out of some of their crude longs, buying in the natural gas, hoping that the spread will come in. Now, as I said, there's just so much natural gas sitting out there right now that if the inventories keep building, they're going to have to burn it off. They just throw it out. Now, that is not something that happens to a commodity that you want to buy. It's something that happens to a commodity that you want to sell. The only thing fundamental that could drive natural gas higher right now is the hurricane season in the United States. So there is going to be some movement of selling in crude oil and buying in natural gas, but the longer-term fundamentals for crude oil seem a lot stronger than what we're looking at in natural gas. So I think the longer-term play would be to stay long crude. I think if you want to do something in the short term, there will be some movement in that spread. It may tighten, but longer term, I'd stay with the weight in the crude oil.
Jonathan, but we have a viewer email from Shah asking, would you short natural gas right now?
Well, yeah, we've been short natural gas for several dollars now, and you know, this little bit of a blip higher, I think, might be a good chance, actually, in the longer term, to sell it, because I think there's too much natural gas out there. From a fundamental point of view, it should be going lower. Anytime you're short natural gas going into the hurricane season can be very dangerous. It could also be very profitable. So looking at everything all-encompassing, I would stay long crude, and I think flat, maybe neutral to short natural gas is the play that'll work in the long term, unless we see another 2005 Katrina and Rita hurricane season.
Jonathan, thank you so much for your time today. Really appreciate it. I'm going to recap Jonathan's trading views for you. He's moderately bullish on crude oil, seeing a gain of up to $10 a barrel in the next 3 to 6 months, and he's neutral in gasoline. However, he is less optimistic about the prospects for natural gas, as you heard there, due to the supply issues.